Welcome to the Chaim Investment Advisors Podcast. I am Chaim, aka Victor, and I am here with Pablo, and we are going to be talking about the wild world of crypto this week.
The wild world of, that's right. It is a wild world in crypto. I think there's a lot to talk about there. And it's been a long time since we talked about crypto. And I think we should talk more about crypto because it is becoming more and more mainstream. So I think it's important that people are educated. There's this saying in crypto that is do your own research, which basically means please don't try to sue me if I give you bad advice. That's what that means. So people say that because they always just give you advice and they say do your own research as if that is some sort of caveat that they just explained to me that I'm guaranteed. I remember there's this coin, which I haven't looked at it recently. And I am not only not endorsing, I am disendorsing. I don't know if that's a word, but if there's a way you can not endorse something, that's what I'm doing because I do believe it is Ponzi. Yeah, I believe it is a Ponzi scheme. I'm pretty sure that anyone who looks at it would also believe it was a Ponzi scheme. And it was called DRIP. And they were there were these guaranteed returns. They would always be you get guaranteed 10% returns. People tell me how you just lock in your money, you get guaranteed returns. I'd be how does that work? And they're they produce the coins and they give them out of the ether and they give that to you. And I'm well, what's the value of the token? What is the purpose? What's the community? They give you 10% of your coins. I'm coins that are worth nothing. I'll give you 10% of Pablo IOUs if that's what you're looking for. You know what I'm saying? It makes no sense. And so our thing with crypto is that we want to talk about it in a more open, transparent format so that you guys feel hey, you're a little bit more equipped to see things when these people come to you with these. And then, by the way, they continuously harass me when I told them that their coin was worthless. You could go to the paperwork and see that the coin absolutely did nothing. Just the coin printing itself, you know what I'm saying? I guess it thought it was Bitcoin. Some people are going to get mad at me because they're that's like Bitcoin. I'm well, it wasn't even that secure. You know what I'm saying? It wasn't even that. There was no ingenuity to it at all. Yeah, you want to be able to look at these things, look at the tokenomics as we call it, and look at that could be taken a lot of ways, but we're thinking in the crypto sense. And then you could look at the papers and stuff, and you can find out for yourself. So you should do your own research. That's true, but you should also know that anytime people say that, they're probably trying to sell you something.
Right. Yeah. No, it's I am selling you this, but I am saying don't listen to me.
That's right. Yeah. But only because regulators are listening.
Right, yeah.
If it was just you and me, I wouldn't say this, but regulators are here. So I want to make sure. And this is the thing. It's there's, you and I know there is some ridiculous coins out there.
Yes.
Some of them I won't even mention because you literally just have people harassing you because they're in the coin. And that's what makes it to me like a Ponzi scheme. If your supporters have to come harass me because my comments might devalue your coin, long term devalue your coin, not in the short term because I just said something, because your coin is worthless, you know what I'm saying? And then they have to come harass me. I think that maybe your coin is a Ponzi scheme. So
yes. Yeah. So we're gonna hit on some news updates in the crypto world. Luna, among other topics. We'll talk a little bit about NFTs and talk a little bit about DeFi, hit on a bunch of different areas, news, developments, things going on in the crypto world. Because, people do ask, what is going on with the crypto world? So we'll get into that, and we'll start with Luna.
Yep, and Do Kwon, right?
Do Kwon.
He's the hero of our story.
Right, yeah, we got to talk about that first because Luna, for people who do not know and are also listening to this podcast, which I don't know how many of those people are out there, but if you don't know about Luna was one of the biggest blockchain projects in terms of how much money it attracted. Off the top of my head, I'm going to say I recall it being about $60 billion in market capitalization, which is a pretty decent amount of money. That would be considered a large cap stock. If it was a stock. So we're talking about a pretty big operation here, and it basically all evaporated in a matter of less than 72 hours, less than 2 weeks ago. So
Yeah.
it was a major meltdown, one of the biggest I think we've ever seen. I think it is the biggest we've ever actually seen
Yep.
through certain lenses. And yeah, where to even start with that?
Well, so I think that like Luna is one of those things where there were a lot of people who had some concerns, but there was a lot of optimism in the cryptocurrency and decentralized finance space because like it actually had a cool idea. I think we talked about some other podcasts, but we talked about like pegging prices, to $1 and making it sort of like using a stable coin and the Luna coin to make it a stable currency, to make it something you could use to actually buy things. And people were using it to buy things online. Right. But there were like always some problems when you try to peg your coin to another currency. And the biggest problem, really, in my opinion, and you might like Victor or Chaim, you have like some ideas about this, but I think the biggest issue, right, is that someone is going to try to make a run on your pegged currency because this happens with actual, like fiat currencies. Like some of the most wealthy people in the world are known for like making runs on, whether it's the Bank of England or like, some Southeast Asian bank or et cetera, I think mostly of George Soros, who's like really famous for like a couple of big runs that he's made.
The Black Wednesday event on the pound.
So when you in like some sort of like forex / like finance terms, when you peg your currency, some people who are investing see that as a challenge, right? Just when pegging your currency, they'll see it as a challenge. And then when you're Do Kwon and you tell everyone, just go ahead and try to ruin my cryptocurrency, then you're really actually challenging everyone else to ruin your cryptocurrency. And what we have here is like if the momentum is high enough, and because of like the kind of things that you can do on cryptocurrency, which you can't like, there are products that you can use on chain which are not similar. We don't have an equivalent off-chain products, right? I think of like perpetual futures. I don't really know of an equivalent of like the way perpetual futures work on chain as they would off chain. And if you do, please email me and let me know. I want to know about that. But but like these are the kind of like instruments that you can use to have a run on a currency, and it's devastating. Like if you get enough momentum, it will crush your chain. You really want the goodwill of everyone. That is one of the things that like propelled Bitcoin so yeah, I think that like
so basically for people who are not aware of what happened here, the founder and the leader of Terra, Luna, was antagonizing people on social media, challenging people to take him down, which now we don't precisely know yet what all happened. Like we don't exactly know the mechanism by which it got tanked.
We strongly suspect though, because in the way that decentralized finance works, and if like you have like a very even preliminary understanding of decentralized finance, I can think of like 5 ways that a lot of money could have like moved in on Luna. And if I can do that, the guy with $1 billion definitely can do that.
Right, and it's probable not just that somebody attacked Luna for amusement, but actually made money while doing it, because you can do that, like you mentioned, using if perpetual futures were indeed involved. They made a lot of money.
to like put it into context, when you would short something on a perpetual future, you would be able to make however high your leverage was. And for those people who do not live in the United States, where we have qualified investor requirements, if you lived in some other country, or you just said you did because you're in cryptocurrency and you're a billionaire, if you just said, you would be able to go to a place like Binance and get like quite a lot of leverage, 50 to 100x. Maybe you can go to like Mango and get 50 to 100x, depending on like where you went and what the currency was. You can get quite a lot of leverage. And you know anything about shorting? When you shorted that currency to practically zero, you would collect all of that. So you can think of that as your profit. So if I went to leverage for 10x and then the pretty got crushed, I made 10x my money in 3 months. Which for those of you guys who are new to finance, that's good. It's really good money.
That's pretty good. Decent amount of money, and astronomical risk was certainly involved, no matter how this was accomplished. And we're still kind of waiting for details, or there are a lot of theories, and some have seemed pretty credible to me compared to others. Basically, um, the peg was forced to fail. The peg failed, and when it did, and the stable coin was no longer $1, it completely collapsed within 2 days after that point.
And anytime you have a peg and your peg, doesn't keep, your currency is like way too volatile and it's rapidly losing value. It's just not like, you're not going to have a good time, and especially when you're talking about stable coins where people want to make transactions online quickly. They don't want to hear that their dollar is now worth 50 cents. That's just not going to be good for business.
Right. And it does happen in the currency world. A number of major countries do have hard or soft peg to other countries. Usually it's the dollar, it's the euro that people have pegged their currency to. But in cryptocurrency, it was an interesting and intriguing experiment that did go down in flames recently. And that should really kind of bring us to our next topic, which is stable coins more broadly. Now, Terra Luna was one of the biggest stable coins. It was what's called an algorithmic stable coin. And that means there wasn't $1 behind every $1. There was a mechanism that was theoretically purported to work, and it actually did work for quite a long time at quite a large amount of capital involved, which is impressive. And
there were many real world transactions. I mean, that is another reason that, like, even though the founder Do Kwon would go on Twitter and say crazy things, there were still a lot of people who were supporting it because it was the idea that, like, hey, we have this cryptocurrency and it's being used in the way that, so often cryptocurrency is accused of not being used. People always say, like, when can I take my Bitcoin and go buy a car, et cetera, besides Teslas.
Right. I mean, I used my Luna to buy stuff when I had some. So stable coins, Luna was an interesting one. It was the biggest stable coin that was algorithmic to date. It got the largest, but there are other controversies around stable coins that have emerged afterwards. People say, well, can you call it a stable coin if it can go from 1 to 0 in a few days? And that's
a good question.
that's a good question. Clearly, Luna was not actually. Terra Luna was not that stable in reality, but some are better than others in terms of how do they work with regulators, how audited are they in terms of where do we believe money to be, where do we know money to be. One that we have kind of obliquely numerous times referenced on this podcast is Tether, which is now the Tether dollar, hot topic of late.
Yeah, I mean, Tether has always faced super intense criticism because Tether and its next biggest market cap stablecoin for the US dollar that's pegged is USDC. Both these coins promise that you have a dollar for your coin. So they're like, hey, this is on chain. This is your token or your coin, but there's actually a dollar that represents this coin somewhere. Yeah. And the reason there's been such controversy is because Tether has been less transparent and forthcoming about where their dollars are. There are some people in the financial space who say, look, if they had this amount of money or cash, we would have seen it somewhere. If they actually had that, whether it's short-term paper, wherever it is, we would have seen that somewhere. It would be hard to accumulate all this cash and us and no one to have known, right? And then, on the other hand, there have been similar criticisms about USDC, which I don't take those criticisms as much to heart, because USDC like basically said like, yes, some of it's like short-term paper, and for those people who are like conspiracy theorists, that means a lot to them. But for me, it doesn't mean anything, because short-term paper and dollars are pretty much equivalent. If you understand like the world of finance, you can understand like why in some cases it might even be better. You're still dealing with something that's super liquid and can convert to cash pretty quickly. And so USDC has always been below Tether, but there's always been this sort of shadow over Tether about like where all the cash is and if it actually exists. And as cryptocurrency has like, slowly moved into its fall from its summer, a lot of people have decided they need to get their money off chain. And that has also reduced the market cap of all cryptocurrencies, including Tether. And so the concern is, right, as like the market cap is reduced, is that some of the momentum might be lost, right? And then there's even more of a concern that like, hey, are you liquid? Do you actually have this cash? Because if you don't, and the market cap really begins to collapse, then like there could be issues. So there are a lot of people, I think, and you would agree with me, like a lot of cryptocurrency people backing Tether. USDC is being backed by maybe a lot of more traditional finance people, which is one of the reasons I think, it actually makes it possibly more successful in the long run, because if your competition is also invested with you in the success of a project, it's even more likely that project's going to be successful, right? So traditional finance being invested in it tells me that they don't really want to see it fail, and neither does like cryptocurrency. So.
Right. Also, USDC does not have as toxic a regulatory relationship as Tether does. That's probably, from my perspective, the most concerning thing about Tether is in reality, if they are found to have defrauded investors by saying, "Oh, it's all backed by $1," but it was actually backed by stuff that may not have
some derivatives or some things that it's hard to see. And another thing I would mention is, for those people who might want to go read the story, not only is it a toxic relationship, but just some of the background itself is kind of shady.
Yes.
Which is a concern, right? You wouldn't want to know that the bank manager at your bank was a shady person. You would not be stoked to hear that.
Right, because I think that there's multiple videos on YouTube that are just fascinating, kind of like rabbit hole videos. The Defiant has done one, CoffeeZilla has done one, that are really interesting. Actually, CoffeeZilla has done multiple ones on Tether that have been quite interesting. And Tether is a little bit concerning. And Tether also, there was, I want to say a couple years ago now, a pretty interesting link that was drawn by Bloomberg analysts between casinos in China and offshoring of money, of capital from China to the blockchain, which is anywhere. And for people who aren't aware, China has very strong capital controls compared to most modern countries. Last I checked, it's about $50,000 US that you can have leave China, which is very restrictive, very restrictive, with some major exceptions. Real estate, your kids going to college, there are some exceptions around there.
It really creates a lot of environments on chain where a lot of Chinese money will go. For instance, the other day I was talking to someone and they were asking me, hey, for some advice, where should I put my money in terms of liquidity pools or aggregators, et cetera? For those of you who don't know, these are things you might want to look into, but definitely do your own research. And this is not me selling something.
Right.
But this is just places where you might collect some sort of interest or returns on different tokens, et cetera. And there was two that were brought up, and I said this one's a little bit safer. And he's like, why is this one a little bit safer? I'm like, well, the problem with this one is it's largely funded by Chinese money. So if something happens in Chinese politics, you have no idea what's going to happen. All the money could immediately leave. There could be a lot of volatility. And if you look in the past, if you see political events in China, you can actually watch the money, the total value, under like, this particular aggregator, you can watch it like move around. And so I was like, yeah, there's likely they both won't fail. They'll both be okay. But there's a slightly larger chance that this one will fail just because of how centralized all of the capital is from one particular country. So I think that you touched on a really good point there, is just knowing about why people put their money in particular places is probably like half the battle, right? Like, I mean, a lot of people are just like, I can go make 10% in this or whatever, and then they want to go do it. I'm not necessarily like the best. You should actually, this brings up one really great point, which we're going to talk about, which is a thesis for valuation. Right. I think that's something that we definitely should talk about. Before, I just wanted to like mention though, that even though Tether, does have a shady background, a lot of its behaviors do remind me of the Fed. So I don't think it's totally. Little private joke about printing money.
Right. Yes, they definitely. I mean, they print money. That's what they do. What happens after that? We will see. We will see. But there is some kind of. I don't want to get too much into it because I think it may be overblown. But some people have made the argument, oh, Tether's going to crash. Like the actual price has crashed. Now, billions of dollars have been taken off of Tether. There are billions of dollars less Tether in market cap in just the last couple months. And some people have tried to draw a line from that event to it going down in price.
To some sort of collapse, yeah.
And it hasn't happened yet. And that's important to say because some people predicted it was imminent, and I'm certainly not going to do that because not enough is known. That's my thesis on Tether and why I generally tell people to steer clear of it when asked, and I've done that a number of times in the last couple of years with some pretty significant amounts of money. Is say, no.
Well, like one thing,
this thing about it.
One analogy people might see is that, like, if you think of these stable coins that like where they're asset backed by like $1 or yen or something like that. If you could think of them kind of like banks, right? Your bank clearly doesn't hold all your money, and no one expects your bank to hold all your money, but they expect you to be able to get all the money. Yes. And if you can't get all the money, that's a problem. And so that's really what we're saying, and so like the likelihood that Tether will collapse, well, maybe it's increased because of like market conditions. No one's hoping that Tether collapses. We all hope that it stays up because it's not good for the environment in general. But it's something to be aware of, just like you would go to a bank and say like, hey, I'm going to make sure that like I can come back and get my deposits at some point, and there is no FDIC on chain, just so you know. Also, if you send your coin to the wrong address, you lose it forever. And that's why I'll be putting my address on the Zoom link. Peter, all of you want to send money to.
Have it your name.
That's right. Yeah, exactly. Yeah. Actually, what's funny is like, and then we'll get back to like the thesis thing. But like, I think what's funny is like they recently had that part where it's like people didn't like having these random alphanumeric characters for their wallet, so there was a product you could get that was like to like basically make your wallet more simple, which I thought was kind of funny because I'm like, this is also a product to make it easier to you to send money to the wrong place. Like if you're gonna have trouble like copy and pasting the alphanumeric characters, this is not gonna like solve your problem.
No, you misremember how to spell Pablo.
Yeah. Have you ever went to the wrong website? That's how easy it is to lose all that money. You know what I'm saying?
Yeah, it'd be a real problem for me because there's so many ways to spell Chaim. It's not even an English name, so that'd be a problem.
That's right. Don't worry, Chaim got it. But we do want to talk about like the thesis of like valuations because it's important. A lot of people in there gambling. You're welcome to do whatever you want with it. It's your money. That's why you can do whatever you want with it. But if you want to know about some thesis evaluations, I think like Chaim and I have some ideas and like share them with you about how you can approach looking at things in a fundamental investor.
Right. So yeah, that's kind of a good segue from Luna to stablecoins to DeFi, which is a major topic. And I get asked about a lot, and there's a lot of kind of at the moment panic around it, much like a lot of high momentum investments over the last 2 years. And one thing that is good to talk about is this will also be relevant to NFTs, which we can talk a little bit about too, which is with a lot of crypto assets, some of them do not have equilibrium pricing, which is for a lot of you going to be a new word. Equilibrium pricing is the idea that we can know all of the cash flows that will be produced by an asset, and we can understand how those will come back to us as investors. When you can do that really conclusively, the easiest version, slam dunk version, is dividend growth. This is the classic model. A really boring company, you're a water utility that pays a certain dividend and grows it at a certain rate. You pretty much know the price.
That's right.
Exactly. And that's called the equilibrium price. We can price
when you're playing
the money they'll make in today's dollar and understand how we'll get it and at what point.
Yeah, exactly. It's like when you're playing Monopoly and you know that without further investment, you're going to get $50 every time lands on the utility, right?
Yes.
Water utility. But nonetheless, this is correct. And I think that you touched on another great point. So we talked about tokenomics before. A lot of times when you go to different tokens or coins, you can see how their business is set up, how they intend to produce coins, how they intend to distribute coins, or tokens rather. For those who don't know, coins are usually the chain. So we think of coins as Ethereum and Bitcoin and Solana, and sometimes you have second layer coins what is it, AVAX and even Luna, so all these things are coins, and usually on the chain you have tokens, and tokens are just sort of the products, the apps, the DeFi finance apps or decentralized apps. And so a lot of times when people, the chain is something you either have to believe in it or you don't. So if you pick Luna, bad call. You know what I'm saying? But it's likely that there will be some chains in the future because that's the progress of technology. And there's a lot of technology that can only exist in this decentralized finance world. So then you're thinking about hey, what kind of tokens can I get? And I'll give you an example. We won't name names. Well, we might name names here, but I'm not going to name names yet.
Right.
So I think a great example is there's a place. Kind of like we were talking about, there's different aggregators and different farms, different places that you can go provide liquidity or provide loans, etc. Leverage loans, all sorts of things. And there's one place that I've been where they have a specific layout for the sort of fees that you'll collect owning that token. So that you're going to collect a certain amount of fees. So then after that, you just have to think about how much is it going to grow and how stable is this, and do I know these developers by name? Are they anonymous? Things of that nature. But at least you have an idea. They've laid out a plan. Now there are other places I've been where I've collected coins or tokens rather, and I sold them immediately because they had no schedule for fees or anything. They were just eventually we'll tell you what it's for, and I'm I don't want to know what it's for eventually. I want to know what it's for now. You know what I'm saying?
Right.
So I collect them and I'd be no, I'm out. And so that's the equilibrium pricing, right? If you're not able to calculate the present value of future cash flows, there's no way for you to figure out what you think it's actually worth. After that, it's just sort of speculation, right? So
right. That's an important element to approaching investing in that space is to say, well, if I don't understand how cash flows will be generated, how they'll come back to me, in reality, probably it relies on new people buying this.
Yes.
It relies on for some reason, me being paid by these new people. And that's not a super strong thesis at best.
Yeah.
At best, that's a not good thesis most of the time. And at worst, it is under the right circumstances called a Ponzi scheme.
Yeah, at the very least, this looks a lot like a pyramid scheme. Where if you need new people to come in order for you to get paid, looking at you, Social Security, it definitely doesn't seem like it's on the up and up, right?
Right.
If new people have to come, that's not good because the thing that you're buying doesn't actually provide any value. And I think that you and I are on similar pages where we think that there are a lot of coins which are like, hey, these are like kind of robust chains. They got cool things going on. Even in getting into it, experimenting with them, we just sort of like maybe the aesthetic, or we like the people, or we like the process of understanding technology. And like kind of the oldest one, Bitcoin, is one where like it doesn't really offer something, but it's kind of like people look at it. I often hear like the store of value or gold. Personally, I don't own a ton of Bitcoin, simply because it's hard for me to buy things not understanding what the future cash flows are. That doesn't mean it's a bad idea. I mean, tons of people who bought it and became like millionaires. So I mean, it could be a great idea. But it's about like your comfort level. I think you need to be comfortable with the level of risk you're taking.
Right.
And if you're out here, say for instance, it's say it's like early 2020, I think it was, and you decided that you're gonna have options on oil, WTI. You know what I'm saying? It can all very quickly collapse, right? That's a speculation, right? You're not looking at future cash flows. You're trying to make a judgment. And really what you're trying to do in these situations is beat the market. So it's often good to ask yourself before you speculate, am I smarter than everyone else? Or at least most of everyone else, because you're going to have to be to make money in those situations.
Right. And it gets to the heart of, are you a trader? Are you an investor? An investor says, look, I want to understand all the ways that I'll be paid at various points. I want to understand what my total return is. And the whole point of that exercise is to say also, when are you going to take profit? Now, if you've done equilibrium pricing models on things, when you are done with them, when they are fully robustly valued, and you no longer are going to get a whole lot more out of them, probably. And that is something that is notoriously difficult for many people who have been in crypto to know, like, okay, well, like, when do I sell this thing? And so, my preference has always been for things that I have some kind of notion of how I will get paid back. And, there a mechanism exists for me to get paid from actual cash flows and not from just new money all of the time. At least not directly, because that does kind of trouble me when that is the thesis. So if the thesis is, well, it will probably go up for some unknown reason, you're probably in a trade. In trades, you have to be very careful. You have to know, when do you get out of a trade and why.
They're different skill sets entirely, and you have to practice them differently. And to be honest, the learning curve for trading is steeper and more costly. And you want to practice trading in a particular place. You don't want to practice it with all your investments. And I think this is something we often talk about, that people act like they're trading when they're investing, where they love to do this thing where they buy it really high and sell it really low. And the reason that people do this is because they have no thesis for their investment, right? Like, we were just talking about a coin or a token earlier before the podcast started, which we were like, these people were buying this token for between like $7 and $10 last year. And it's now at around 98 cents. And so regardless of whether you think it should be worth $7 to $10 or 98 cents, our question is, what changed since last summer that someone thought, I can buy this for $10, and now my thesis is it's worth 98 cents.
Right. And so that's the thing about a thesis, is that you reduce your reliance on confidence, because that's one of those classic, situations where confidence is why people buy high and sell low. If you have a confidence-driven thesis, you're probably going to invest the least optimal way, which is to buy when you're very confident because other people are confident, and sell when other people are not confident and you're no longer confident. That's not really an investment thesis. And it's one of the most documented phenomena with individual investors. And there are tons of studies on this. Dalbar is probably the most famous because they've done it comparing people investing in the exact same product and using index funds in particular. So that's probably the best data set I'm aware of, because is an extremely clear example of these are different people using the same product at the same time
Yeah.
and coming up with optimal and suboptimal outcomes. And confidence investing is known to be the suboptimal way to invest.
Well, and like, you know, it's one of those things, you're not going to make a lot of money if you're doing the confidence investing, whether it's investing or trading, because again, you have to be right more often than you're wrong. And one of the problems, issues, like, you know, I think a lot of people have heard this quote by Warren Buffett, you know, that when other people are greedy, you know, you needed to be not greedy, but when, you know, other people are not greedy and they're fearful, yeah, exactly. Then exactly, when everyone's fearful that the streets are running with blood, then you need to be like super greedy. And everyone thinks like, okay, that's easy, I can be a contrarian. What people forget though is the long-term average for like assets like the stock market, et cetera, is up, right? So that means the bias is growth. What that means is you can't just do the opposite of what everyone else is doing all the time. You are still going to lose money, right? So there's a lot more selectiveness to contrarianness than just being like, just doing the opposite of the market all the time. You would be down, like, for the most part.
Yeah, you spend most of your time losing money.
Yeah, exactly. Yeah, and so that's I think what people forget. They go, "Oh, I can do the opposite of what everyone can do, and I should be fine." Like, well, no, that's you. The truth of the matter is, you need to be doing what everyone else is doing most of the time, but then know when not to do what everyone else is doing. That's like true contrarian investing, and also somewhat similar to poker, which is that like you don't bluff all the time, you just bluff occasionally, and that's when you make extra cash, you know.
But for most people, you know, kind of the normal psychological ranges of investors, because there are outlier psychologies and people who always buy when it's down, and who are, you know, that's how their psychology works, and it doesn't always work. It's actually not the only proven way to invest the right way. The thing about having a pretty solid thesis on your investment is that you really reduce your reliance on, you know, confidence.
The confidence in general. Yeah, exactly. Right. Yeah, that's kind of the point. Is
you're investing in a way that works for you. You know, this is what I will buy for. This is what I will sell at, and then you kind of stop paying attention once you've sold it and walked away. When you've got what you need out of an investment. Any experienced trader will tell you you don't look back. Ever.
It's kind of like you know, if I went to the store and I know everything I want to buy and I know the prices that I'll buy it for, and I go there and either the prices are there or they're not. If they're not there, I don't buy that at that store. I go somewhere else, right? But I bought the things that I want to buy at that price. And it's funny because it's kind of like also brings us back to that, like, you know, sort of maybe like a naivety about markets, where people would be like, you know, what if we could all conspire together to purchase something, or what if like people who sell, the sellers, conspire against us, you know, for price fixing, et cetera. And like we've talked about this before, it's like that's not really the way it works, because if you have an intrinsic idea of what you're going to pay for something, it's impossible for like any outside influence to really affect that. You know what you're going to pay, and it's either going to be below that or it's not. If it's not below that, you're like, well, I'm done here. You know, you don't have to like, and it's good because you don't have to like worry a lot. And this is especially important in crypto or any new technology, new space, because that's where the most volatility is. The reason that it's so volatile is because there's so many things we don't know. You know, it could have just as easily happened that, you know, maybe the founder of Luna didn't make crazy comments, or he just somehow survived this. And, you know, he's like, chain would have been like really great. You know, it's possible, you know. He made it less likely, I think, when he made ridiculous, irresponsible comments, but that's another story. But we do, it actually like kind of brings us, as far as like comments and CoffeeZilla. There was a CoffeeZilla I saw recently, I think it was like up today or something, you know, and it was about the Bored Ape Yacht Club.
Right.
We
should talk about NFTs. Yeah, we should talk about NFTs as kind of this whole separate bracket. And I think my last point on DeFi, they'll just share for people, because this is news.
Totally.
DeFi back in November of last year reached $320 billion in total value locked, which is how much money is on chain. And that's a lot of money. That actually, we're getting to be mega caps. There's like three mega cap banks, basically.
That's a lot of money. Yeah, that's, and the thing is, like, decentralized finance does something that traditional finance does not. And so even if we're in this sort of like, August or like fall going into winter, and the situation is like that, the decentralized finance will have a place in the future. That's not like a ridiculous thing to say at all. Sure, a lot of people, especially like professionals, we want to like be careful about what we say because we don't want to cause any ripples or cause any trouble, and regulators haven't like quite figured out how they're going to handle it. But there are a couple of things here to notice. And I think one of the things to notice is regulators and other institutions of finance are already building spaces around this decentralized finance. Now, they may not be telling everyone else about it, but they are. They're building spaces about how they're going to tackle these things. And what that means is they have come to the conclusion that decentralized finance is not going anywhere, and therefore they need to like incorporate it into the system they have. And the second thing I would say is like about regulation, which I think is funny and shows kind of a lot of the ignorance of politicians, which is that there's this like hurry to regulate things on chain, et cetera, and that kind of defeats the purpose of decentralized finance. And it's not even how it's set up. I think like one of the more ridiculous things I saw was like the idea of taxing miners and validators, as if these people even know where this money is coming from. Of course, it's not what I would call anonymous, but it's like quasi-anonymous. It'd be very hard to find some of these people, especially if they're in other countries where maybe your own customers, not like that big of a hurdle, because you get some sort of organization that has a lot of forged documents. There could be all sorts of situations like this, right? And I think that like there's an ignorance there. I think that like what smart regulators will probably end up doing is realizing our job is to capture regulation and taxing when things come off chain, because even though there will be a space on chain to do things, a lot of things are still going to be off chain. That's just the reality. You're going to have a Visa card, you're going to have a phone, what I'm saying? Sure, you might go somewhere and they're like, hey, I accept this cryptocurrency, but a lot of places for a long time are still going to want you to use traditional finance. Your landlord probably is going to want you to pay him through some sort of traditional finance. He doesn't really want to see the like, even though we talk about stability, and it's a very strange term, your landlord sees stability as a dollar, and if you're a landlord, you probably see stability as a dollar, and you don't really want to hear some esoteric information about how, well, this is really stable. You're just looking at it from like the wrong pricing perspective, And so that's what I would say. I think that like this is here to stay, and I think that, like you said, huge market caps are going to continue to rise. More technology is going to come along the way, and it is a space where you need to realize that like it is decentralized. So that means that there are a lot of things that could go wrong, right? Like you could send money to the wrong place, and that's it. When I send money to the wrong place as a bank or through a bank or something, I can get my money back. I send money to the wrong address, I just got to ask that guy, can you please give me my money back? And this has happened. Happened, right? With like, we've seen this happen with actual like, tokens and actual like apps or whatever, where they send money to the wrong people. And one guy, I believe, threatened to report everyone to the IRS, and he got the least amount of money back that any other company has gotten back. I think one company got back almost all the money. He got back like something like half of it, because people were like, report me to the IRS. Because the point is that it's a decentralized space. So I do think that you're going to see sort of regulatory regimes that address that. Let's say like, hey, we understand that like we just don't have the resources to control a decentralized space, but we have the resources to collect taxes, et cetera, when you come off chain. And that's really, to be honest, the efficient way to do it. So I hope that's the way they go about it. Definitely this whole thing where they're taxing miners and validators, and that was just insane.
Right. And that's been unsuccessful thus far. And not actually been implemented. But DeFi was larger than it is now after the Luna meltdown. We're down to 132 billion. And my last point on DeFi is something that I want to mention, is that sometimes people are going to want to bring the same approach that they bring to other segments of asset management to crypto and say, well, the only answer is to just keep throwing money at the same exact investments all the way down until there's like a new increase, there's a new bull market. And that isn't always what works in crypto. Like as somebody who's watched and been involved in crypto for some time, a lot of times the new waves that happen, the new things, all of these DeFi products, none of them were around in 2017 during the major crypto bear market, except Ethereum. And Ethereum did not really exist in its current form. Ethereum was a very different thing at that point.
I mean, so, I think you and I both agree that like there's been some amazing, like there were dreams before when crypto started about how it could be, and only now have we actually seen these dreams come to pass, where we can actually go on the different chains. And you and I have made purchases on different chains and used different products and figured out, just to see how it works. And it's really exciting. You don't really now need a ton of money just to go check things out. And that's one of the things I would say to people. If they're like, hey, I want to get in this space, don't take $5,000 or $10,000 or just do something ridiculous where you don't really understand. Just go learn from people, take like, what you can afford, like a very small amount of money, like especially depending on what chain you go on, you can take a very small amount of money and then go use it and play around and see how things work. And to be honest, like the margins and the costs are so thin and the transactions are so like, depending on what chain you go on, they can be like, efficient, depends on the protocol. That's something like you probably learn about as you go on there, but it's pretty cool. There's a lot of cool things you can see. There's a lot of cool, the things that make the Facebook meta look ridiculous. You can see actual meta universes that are like way cooler, and just like there's a lot of cool things to be done there. So.
Right, and the interesting thing is the next big wave may be sparked and entirely run by products that do not exist yet. And that's one thing that I always like to remind people about crypto is, people ask me, are you necessarily like throwing all this money at stuff that right now is down? And my answer is not as much because as I would in other asset classes where in consumer discretionary stocks, I know exactly what I want to buy in what price. Crypto, in a certain regard, I'm kind of thinking, well, I don't know what doesn't exist yet. And so I'm also interested in what that will be. And so totally. I have an eye open to new opportunities all the time. And I think that's the one risk that people run during a bear market in crypto, is to throw everything at existing projects thinking those will be the ones that bounce back, when sometimes it's actually a whole new product that, crypto has gone through many waves, but most of the times the new waves have been led by brand new products, and the ones that have been around the longest sometimes, Bitcoin and Ethereum notwithstanding, actually kind of struggle to keep up. It's an exciting space like that.
We see that, and like the last time there was a bear market, and out came like AVAX and Algo and Solana and Terra, and like obviously Terra didn't end well, but those other products, they came out really strong with really robust communities, and so we see this like process of like, what is a new evolutionary change, and there's going to be some chain, or there might even be like coins that like are now undervalued that are interchangeable throughout like other chains that like haven't seen their full use. You see like coins that like what is like Graph and Matic and things like this, and you're like, is it seeing its full potential? So you really have no idea, and I think you're totally right about that. Like it's an exciting space. By the way, I just want to mention that Chaim has a gallery on crypto voxels that you should go check out. It's a pretty cool gallery, and actually we have a meeting space on there.
Right, and some of the people who listen to this podcast do visit when I'm in the office, which lately, since being a new parent, has not been that consistent. A new parent again, but I do actually intend to start doing that again. But yeah, that's a good segue to NFTs, because it's an NFT gallery.
Yeah, intellectual property, and let's talk about
NFTs.
Exactly.
Yeah, so we'll start with the situation you were referencing about Bored Ape Yacht Club, and
So the Bored Ape Yacht Club, which is an NFT, a really cool NFT in my opinion. Oftentimes when I was looking at NFTs, I had bought NFTs that were not great projects, but after some studying, I realized like I really want to know what this NFT is trying to do. So I usually like to go first find out like what the hype is. If you see a lot of people who are sort of like just naysaying and they're just like really Debbie Downers, and like I just stay away from those projects because first of all, like it'd just be like the same thing if you went to like some sort of IPO or something and everyone's like, this product sucks, right? You don't want to like invest a lot of time and energy in that product. Second thing I would say is like, do not think that you're gonna buy like the next Mona Lisa or something like that. You should like the aesthetic of the product, you should like the idea of the product, but you should also understand like what that product's offering. I've bought some NFTs where they were very skittish developers and founders, and they were like, we don't want to do anything and we're really worried. And I'm like, well, you're in the decentralized space. So this is what you're telling me is I've wasted my time and money with this NFT. I'll hold it because I like the art, but that was what it was. And I bought some other NFTs, and these people, really were trying to back their community and build something. And I think that is really important. And the reason that the Bored Ape Yacht Club is a sort of paragon of that is that like they do that. Like they have, they give a lot of rights to people who own their NFTs, and it's a very active community, and that's what's helped to build the value. And one of those people, one of those owners, previous owners, I don't know what you can say here. We'll see. I don't know what the legal ramifications are. But Seth Green owned a Bored Ape Yacht, right? Club, NFT, and so he created a show based on that. They animated the show. They had looks like they have a couple of episodes ready to go, and then someone stole his NFT, or borrowed his NFT, is what he's saying. There's a lot of questions here. Sometimes I think, it's Hollywood. I'm like, this could just be a stunt. But let's just talk as if it's not a stunt. Because if it's a stunt, who cares? That's not really our realm of expertise, right? But if it's not a stunt, right? There's a CoffeeZilla episode. It's great. You can go watch it. It's really short. Where he talks about, well, who owns the right to this ape, and can he still make this show? Because a lot of people are saying well, he can't make this show, I think that is part of what we're gonna have a conversation about. And then just generally speaking, what ramifications this has. By the way, I didn't see the show. It could be really cool. It seems like it could be a cool idea, to have this ape thing. But then again, also, how many Bored Ape Yachts are there? How many shows could you have? Would I recognize the difference between this one and another one? Those are questions for another time. Let's talk about the legal ramifications of this Bored Ape.
Excellent. Yeah. So this is actually have some expertise in this area of art law, and so let's say somebody did steal the NFT. Now, some people have said you lose the right to use it, but I say no, because the thing about art is there's actually a really established code, and it has been litigated tens of thousands of times in the United States. So a very, very old code, very established, uniform commercial code governs any art products. And the thing about it is, if you steal a work of art, theft does not convey any rights. No beneficial rights are conveyed in a theft of any kind. And so if they stole it and gave it to their kid, that kid eventually can have it repossessed from them at any time that it is found, located, and able to be repossessed, because you never retain rights as somebody who has stolen something, and you always retain the rights associated with art if something is stolen from you. Because the interesting thing about art is that there's actually many layers of different rights that come with it. So obviously usage, it's on your wall in the case of most works of art, or it's in your yard, it's a sculpture or something like that. That is the most surface level usage right. It's in your possession, it's there. You can look at it. And that's the one that most people are concerned about. If you buy, now most art transactions do not actually convey the ownership of intellectual property. The artist retains it in almost all cases, unless it's explicitly conveyed. And in the case of Bored Ape Yacht Club, it is. As a purchaser, you're the beneficial owner also of the rights associated with it. And in that case, rights actually exist separately from the object itself. So there's things called moral rights. That's a whole other category of art rights that cannot be conveyed through any kind of theft or even a sale in many cases in many countries. In France, for example, there's no way to abdicate the moral rights, and that's basically the right over how art is displayed publicly. The person with the moral rights, and that's often the estate of artists in many cases. The estate of the artist still gets to say, hey, it can't be in that show. Like if it's something offensive about it that would offend the legacy of the artwork, even the person who has the physical usage rights cannot violate that. And so it becomes very interesting in the case of an NFT, because yes, somebody now has physical possession of it, but none of the other rights have been conveyed in that theft. And so basically, if the person who stole it tried to sue him for having that TV show, he would lose. I'm very, very confident that they would lose.
And I think you touched on an interesting point, which is again, we have this point where the decentralized finance world meets the traditional or legacy world, and it's how do these things meld? And the thing is, if you're conveying legal rights that are from the traditional or legacy world, right? That's the world in which those legal rights are going to operate under, and that's the laws which you have to abide by, right? These aren't decentralized laws, and in fact, if we want to talk about what the equivalent of decentralized laws are essentially whatever the algorithm says, and whatever we've all voted with our DAO tokens or whatever. That's how decentralized. The whole point of decentralization and in terms of governance is that it's built into the thing. So you really can't do something wrong from a decentralized point of view. But if you're using the laws which come from the traditional world of finance and law, et cetera, then you're using those laws. You're practicing those laws under that usage, right? You're not practicing them under the decentralized world. It wouldn't even make any sense if you think about it from decentralized point of view, because people would say yeah, you can just take it. I'm yeah, but you can do anything that the algorithm allows you to do or that the chain allows you to do. That doesn't mean anything. You know what I'm saying? It doesn't convey any of these other rights or anything, so.
Right, and it's going to be interesting to see how it plays out, but I do think that the main point about rights really comes down to, well, if it comes into a court, who would the thief have standing in a court? No, they would not, because they're a thief. they would actually probably be in trouble if they identified themselves in such a case, because they would open themselves to, of course, being sued. And also criminal law may apply depending on the situation. So it'll be interesting to see how it plays out. But, since it is a piece of art and it is, subject to commercial code, almost certainly in this case, it's all about who gets to sue who for what usage of it. And I can't even imagine a scenario in which a thief in American law gets to sue the person who bought the legal rights of something. It doesn't make sense. It wouldn't happen. That's my opinion.
Yeah, I think that we spoke about this, and I kind of brought to you watch this call still. What's your take? And after we spoke about it, I was kind of under the same opinion. That doesn't make a lot of sense. And to be honest, I wouldn't put it past anyone for this to just be a sort of Hollywood let's generate some buzz or energy around this.
Right. Right.
And the truth is, I didn't know about the show before this, and I likely wouldn't have cared until this story came up. What do you think? I'm curious. This is kind of off topic, but I'm curious. Have you been following that Star Atlas game?
I haven't been following it very much lately because I'm very impatient about knowing about the development of things.
Yes.
One of those people that, like, when I was a kid and there was going to be a really cool game that I wanted, I didn't even want to know about it until I could buy it.
Yeah.
Like,
No,
I'd hear about it and say, I don't want to see a commercial. I don't want to follow the blog. I want to go buy it.
I completely agree. That's one of the things I was like looking at the game, and then they're like, there are different discords which is where a lot of crypto takes place. If
Yes.
you're like, you really want to know like the places crypto takes place, build yourself a Medium login, get yourself a Twitter, and get yourself
Medium,
Discord.
Discord.
And Discord, yeah. And then you're going to be able to find like 99% of like where all the crypto stuff take place and all the conversations, etc. Which is just kind of funny because it's the last place, if you didn't know anything about crypto, that you would think that these things would take place, Because if you go to Medium and you don't like look up crypto, it's just a lot of like other types of articles. You would never think there's anything about crypto.
Right.
As soon as you, and then, but I was going to say is like, I was talking to a developer somewhere who worked on the Sterilus thing, and he's just like, yeah, like 3 years. And I was like, 3 years? I'm like, I'm not 3 years, bro. Like, why did you guys even bring it up? Like, why are you gonna mention this? It was like, you go to the like McDonald's and they ask you if you want ice cream. You're like, yeah, the ice cream machine's not gonna be working for a couple of days. I'm like, why'd you bring it up then, man? Like, if you're gonna tell me, well, like, not to the developer, obviously, he's just doing his job and he wants to make money. But I think that like that's one of the funny things is you're totally right. I do think though it's kind of cool to watch because I look at it as a good indicator of that particular chain of like how it's coming along, because you could see if that like is really successful. I mean, I know people who love that game Eve. That's like a sci-fi game, and so if there was like a nice immersive world on any chain, really, those are the kind of products you need. You need to be able to pull in like general users, just average users who like find it easy to use and they're supporting your system. But yeah, like. That's just another like a piece of media that like is on chain, and I think that like you said, like there's guaranteed to be new products coming, new stuff coming. It's going to be interesting to see what those products are, and it's just something that I think it's good for like people to begin to explore, because we already see those FTX commercials in like sports ads and stuff, and so there's gonna be a lot of money spent on gaining people's attention for cryptocurrency, right? Wall Street is there, the government is ready to collect their portion of your crypto,
right?
And so
that's all.
Just like you have to just be prepared about like, what is your approach going to be? And it's fine, I think, to also have the approach that like you're really not interested in being in that space. There are some investors in the financial world who say like, I don't want to get into crypto. It's like, well, they don't understand it, and that makes sense. You want to stick to things you understand. But it is a cool place. It's a cool thing, and I think it's like something that there's going to be a lot of in the future, and hopefully there'll be a lot of podcasts in the future on it.
Right? Yeah. We've been not doing as many podcasts lately, so we haven't done a crypto one. I realized in some time, and it's like, well, we got to like talk about a few things at once here, because there a lot has happened in recent time, and probably kind of one of those good overhead things to talk about kind of towards the end here is the fact that in regards to new crypto that will come about and new investment in the space, one thing that definitely has had a major impact on crypto markets is outside of the crypto world, which is capital markets in general in America and in China in particular are in bad shape. I mean, there's just no other way to put it. They're not looking good. I know this week stocks bounced a little bit, but a lot of the fundamentals are actually pretty bad. And that means there is less new money for exciting stuff to happen. There are a few people, there's fewer people taking risk, and the cost of risk also goes up with interest rate. Interest rate, you could easily think of it as the cost of risk. And many people have made that argument before.
Yeah, I mean, I think that like, especially like just in sort of simple terms, you definitely could just think of that as the cost of risk, right?
The price
Because
of risk.
one of the things like we can think of is like interest rates go up, right? Is that we're going to expect more on equities, equity returns. I'm not willing to take like 6% on equities if I get 5% risk-free rate on like on bonds, right? Like I'm like that,
Right.
that just seems like a bad deal. I'll just take the 5% to hell your 1%. I'll know that I get that money, And so there, hopefully we see some better stewarding in the future. Hopefully we see just I think just generally better stewardship from a macroeconomic point of view would be good all the way around in America and across the world. But I do think that like I wanted to mention here, that was a good time to mention that we have in plan. First of all, as far as the podcasts go, we are doing well, which means that we have podcasts ready to go.
Right,
in advance.
multiple ones.
we
got multiple ones recorded.
Multiple podcasts ready to go. Like we have like come back in full swing. So hopefully
yeah.
guys come back and listen. And we're going to continue to build up podcasts and have them ready, so that even like on weeks that we take off or something, we'll have a podcast ready to go and release. And then another thing is like we're probably going to put together a short like Skillshare workshop or whatever, and we've been thinking about this a lot, and not like something in depth, you know what I'm saying, but just different things that we think. We're thinking about like just general financial planning. Maybe people would like see that and be like, hey, like what are the ideas if you don't already get financial planning from us? But if you have ideas for things that you would like to see in that Skillshare, you should definitely let us know. And we're just like looking to like do the same thing we do here in the podcast, which is like public education. We talk about like the interest rates, and we talk about like this coming situation, which we do know is not good, but we also know that if you're prepared and you're preparing now, you can do okay, and even better than okay, if you take the right steps. It's all about preparation, and like you can like figure out like what kind of cash flow you need. You can figure out what you have to do to like maybe you have to like not spend as much money here, and maybe you have to like figure out how to like reorganize some debt. But there are a lot of things you can do, and then that's kind of like our job. Especially like Chaim's like much better at it than I am. Mostly I just do all the smiling. So
that's what my zone. But new topics always welcome new suggestions, and really we kind of like source most topics just from what are people asking about in general. Usually how we get ideas, and always trying to work those into videos. And then on NFTs, I actually really do want to soon do, I don't know if it'll be a series or if it'll be like one class that I teach numerous cohorts. I don't know. It kind of depends on.
Yeah, I think that
I actually do want to talk about art from a more top-down way of thinking about how art is playing in people's wealth management, because that's a kind of growing area of expertise for me, but also a lot of you guys who listen to this are artists or you work in the arts industry, and a lot of people in the arts industry have no idea how it works.
and you actually like, this is something that like you're very passionate about,
Yes,
I study a blog on art. Exactly. So I think that like definitely doing some podcasts on that is going to be super exciting. But yes, I think that like a little workshop on that would be amazing. We definitely want to hear ideas. If there are things you want to learn, we're obviously it'd be very generalized. We're not doing like specific financial plans on Skillshare. It's just not going to be that cheap. Right. We are there to like just sort of give people general education. Maybe if you're just like coming up and you're like, hey, really, this doesn't make sense for me right now to take on like investment advisor to pay for a financial plan, but I just want some general advice. Those are kind of things that we're looking to build, and hopefully like you guys can ask us questions and we can make more podcasts. We find these super exciting. We really do have like a great time. Honestly, like Yes. I don't know. People ask us about how we come up with it. Like, we really do just like come up with an idea about maybe for the podcast or maybe sometime during the week, and we don't really talk about it that much.
No,
like really, we just hop on there and go. Like today we were just like, what can we talk about? Oh, there's like some cool like economic ideas like I want to go over, and then I was like, how about the news? And you're like, yeah, the news. I went through some news items. You're like, how about cryptocurrency? I'm like, yeah, it's good. We haven't talked about cryptocurrency in a while, and so that's how we build these, right? So it's great. It's a great experience. Yeah.
Right, it's always top of mind, pretty much in terms of like what is most interesting right now, and that means we can just like talk about it without having a script, which is great. I don't really have time for that.
Yeah. Well, and also I just think that, like, I mean, in my opinion, like if people have a lot of scripts and a lot of notes and pointers, my question is like, well, how organic is this? How much do they really know? How much is coming off this? I'm saying, like,
how much is from Google, man? That's
right. Yeah.
I always worry about that.
It's like, it's the internet argument, right? Like where you start talking to a person who you clearly know they don't know anything about the subject, and they come back like 2 hours later and they're an expert, and you're like, where did all this expert language come from?
Right, it's like Wikipedia, copy, paste.
Yeah, exactly. Yeah.
No, that way we always keep it fresh. We always keep it real. Hopefully people enjoy listening to that, and I think that's a good stopping place for cryptocurrency this time around. But we have lots of episodes we haven't released yet, so you'll be seeing those, and we will have more probably by the time this is released. We'll have some hanging out in reserve, and so we'll have lots of conversation generated from these podcasts, hopefully. And it is very close to Shabbat, which is on my mind.
I can see the reflection in your eyes.
Right.
By that I mean the reflection of the sun, not like
right. Yeah. So I'm like, Shabbat, and so I got to go do that. And everybody who observes that, not that you will hear this simultaneously, but have a good weekend.
That's right. Yeah, totally. Yeah.
And this has been Chaim and Pablo, Chaim Investment Advisors podcast. We'll talk to you next time.
Sounds good. Talk to you guys next time.